everybody. Thank you for hello. Thanks for being on today's session. Hopefully, you can hear me all okay. I did a little sound check earlier. Hopefully, it was all working. If you can hear me, please do let me know in the questions box whether you're watching us on GoToWebinar, which is my sort of favorite webinar software. But we are also streaming on YouTube and Facebook, LinkedIn as well, and even Twitter, or at least we're supposed to be. We're trying to figure it out as we go along with this. So, but what we are doing in these Trendsignal live sessions is taking you through, I guess, a look through the behind the curtain, if you like, to look at what's happening, what our members are looking at, going through some trades, looking at the latest trading opportunities, and we'll be focusing on FX, indices, commodities, cryptocurrencies, stocks. There's a bit for everybody, if truth be told, and we're going to go through all of that really today. So before I can get into it, I do need to go through a little bit of the boring stuff, which is to do with the risk disclaimer. I won't read all of this, but I will just read the top section here. Spread bets and CFDs are complex instruments and come with a high risk of losing money rapidly due to leverage. You should consider whether you understand how spread bets and CFDs work and whether you can afford to take the high risk of losing money. Past performance is not a reliable indicator of future results. Okay, so important we're aware of that. If you are looking to follow any trades today as we go through them, please make sure that it is money that you're comfortable risking. And bear in mind that anything we talk about, this is an educational session. This is not investment advice. Any decisions you make are entirely your own. Okay. So with that said, let's get on with it, shall we? Last week we had good session last week. So I went through. I'm not going to spend long on this at all because we've got loads of trades to go through. There's some really interesting FX markets, some of the euro pairs, a lot of them setting up again yesterday. So we'll have a quick look at those. Gold, we're still open on that trade from last week. So quite a bit to go through from there as well. In terms of the crypto stocks, we had two stocks trigger that we discussed last Tuesday's live session. So the purpose of this is to run the scans, go through the charts, look at the latest opportunities. We had Johnson & Johnson set up a buy on the 29th, and we took that. We talked about the target. It hit that target. Same thing with Mondelez as well, which also quite small targets on those ones, but they both went on hit that target, which was great. You can go back through and look at last week's live session if you want to. And then also our complete crypto trader products. We've got three systems: Forex, stocks, and cryptos. The complete crypto trader system that picked up two trades last week in last Tuesday's session, both buying opportunities, one on Dash, one on Maker. Both of them hit our 5% target. Really nice trading opportunities there. So what I want to do is take a look through now as to what is setting up as we speak. So let's bring that in and let's go through the screen. I've just got a little board watch here on the right hand side, a very simple thing I mocked up on Excel, but it's just looking at the opportunities we'll be going through today. Okay, so on the right hand side, we've got Forex up here. We've got some stocks that we're going to take a look at, and we'll take a look at these cryptos as well. So let's start with foreign exchange. It's kind of, I guess, sort of my go-to market, really. There's been some great trades that were setting up yesterday. So we'll have a very quick look at those. And there were some big movements overnight, especially with Australia with their interest rate decisions. So that's led to some big movements there on what has otherwise been a very strong uptrend for quite some time. And when we talk about uptrends, that manifests itself on the chart very clearly by a number of measures. Number one, this blue line here. When it's blue, it means it's the intermediate trend is positive. When it's orange, which we'll see on other markets, it means it's a downtrend. Okay. The other things we're going to look at, let me just change my pen color. Bear with me. We can see on the right hand side the weekly and monthly trends. Now it's so important that we're trading in line with the longer term direction of these markets. Now what this system does, whether that's for FX, cryptos or stocks, it will look at the way in which the markets are moving. And when the markets are moving in the right way and you've got the right types of technical patterns that are in place, i.e. looking at longer term trends, looking at ascending chart patterns, the right types of technical setups will be demonstrated with one of these snipers. Now, because there is a lots of sniper trades to look at today, I'm only going to focus on those. But in other sessions, we've looked at trades that don't have snipers, but we don't have to concern ourselves with those today because we've got plenty to get through, which is why I'm talking so quickly. So what we had there was a buy yesterday. Last night's close, and this is what our members were looking at. We'll look at the trades setting up for today in just a second. But just as a simple guide, we have a tool here called TradeMate. which our members can use. Click here to select entry candlestick. We click on the bar with the sniper on it, and that will give us a simple output. Now, what I can do is use our starter limit. So these are the targets that we recommend for our new traders, our new members who are using this system from home. Click on calculate trade details, and that'll give you a take profit level. So for our members last night, they were looking at Aussie CAD. They took the buy on it last night, or at least they hopefully did, and that price has then gone up to 94.55. It's gone beyond our objective. So there was our target. Market's gone beyond then. Nice profit of 40 pips and a really, really healthy winner on that trade with about a 40 pip stop loss on that trade as well. So really nice trade. Going through hitting target very quickly. Now the thing about this is some trades will go a lot further than those 40 or 50 points, but this is about the starter targets, what we get our new members started off on, so that they build, as their confidence grows, as they start to understand more about longer term trends and analysis, they can start to look for bigger targets as well. And we'll go through a little bit about that as we go through the session. Okay, but I know some of you are familiar with this. If this is your first time on Trendsignal Live on these sessions, then please do let me know. Just type first time or something like that in the questions box. That'd be great. Now, I can't monitor the questions box on all social media platforms, so I'm very much focusing on YouTube and also for GoToWebinar. Okay. So look, that's Aussie CAD, really nice trade, and there was quite a number of them that were just like that. Aussie dollar as well, especially when you just tighten that chart up a little bit, you can see the way in which this market's moving. There's a lot of these sort of markets that are showing those higher highs, higher lows, just ratcheting their way higher in line with those longer term uptrends that are in shape on these markets there. So really nice, strong move. And what I like about some of these is you're buying them really high up, and that kind of sounds a bit odd for some people, particularly if they're trading from a stock background. From trading stocks, often we want to buy something that's cheap. When it comes to trading and you're trading over a short term, you want to buy something that is rising. So you want to join something that's already on its way up. This market had closed above all of those resistance levels where the market had spiked below. No sign of any further resistance up at those levels, and the market carried on right through that level today onto that objective as well. So it's a really nice clear trade. So what I like to do and what we teach our members to do here is to buy high and to sell higher, really in terms of those objectives. So what else? So that's Aussie dollar, Euro Aussie. We can see massive sell-off here, and it's basically the flip chart of Aussie dollar and so on, as you might expect, really, because we're looking at Euro against the Aussie rather than Aussie against something else. So this is going to be a downtrending market. You can see that from the weekly and monthly arrows. You can see that from the orange line. This is a market that is just doing this. Okay, and whilst you can take the buy trades, they're likely to be very brief. Okay, there's no snipers on them because of the lower probability nature of those. It is the sell trades, it's the resumption of those longer term trends that we're interested in. Those are the higher probability opportunities, those are the safer, the lower risk opportunities. And you can see how this market has already it's actually already gone way past our objective, our first objective at least anyway. One of the things that we do with this system, just so you know, oh gosh, what have I done there? Is that we can use something called our extended limits. So as you become more experienced, you can use the extended limits there to go for bigger targets, so down to 142.50 here. So we're about halfway there. So the market's already moved about 160 points. We're actually looking for about 280 points on Euro Aussie on this one. And you know what? When I compress the chart up, you tighten up to see where this market could get to, there is really very little down here. So there's little that's going to hold this price. So often what the market will do is it will move from support to resistance, and it will make its way back up to previous levels and get sucked down to those levels as well. What the market is doing here and showing here is there is actually nothing below here for quite some space. What that means is there's a lot of free space that could take this market an awful lot further down. So a lot of our members will no doubt be on the extended limits, but it has hit our initial target already. Euro Swiss, flat on this one, and that was a little loss trade that we had from last week as well, which I showed you on the slide earlier. So, warts and all, will go through this, but we're break even on Euro Swiss at the moment, so it's okay. And then Euro New Zealand also, really nice downtrending market, again giving us a really decent, healthy profit. And this one, a decent profit for us as well. A little bite-sized move from the 29th that we talked about in the session as well. So that was a profit last week also. So look, that's yesterday's trades. What about the trades that are setting up for today? We've got 5 of them. I've just noted them down here. These are the ones from the scan, just for good order's sake. Let me just share that with you anyway, just so I'm not cherry picking. If I go to D1 Sniper Strategy, here's my list of favorite markets here, so I can have a look at those, hit search, and that can give me my output for those markets. So what I can see here is basically Aussie Swiss, Aussie Yen. These ones with a number 1 are the trades that are setting up for today. Number 2 is the trades that set up for yesterday. How long are you in a trade for, Salik? Good question. It depends. I mean, the typical hold time on this particular strategy is between 1 and 7 days, depending on whether you're going for the starter targets or the extended targets. Usually, on those starter targets, Salik, you're out within 3 days, usually. This one here, you'd be out in 1 day. This one here, you'd be out in two days, and so on. This one here, that was 2 days. Okay. And I actually quite like that, because the problem with being in trades for a long time is that markets can pause, they can start to go the other way. And what I find is the longer you tend to be in a position, the more you'll be in markets where they're just stuck and going nowhere. What I generally find is that I prefer is that when you're in a trade, you're in it for that burst of momentum that you see for a couple of days. You take your profits and then you move on, and then you find another market that's showing a burst of momentum. So I'd rather allocate my capital to my margin to a market that is moving fast, that is showing me some real good speed right now, rather than having it stuck in there looking for a big move that's probably not going to happen. You look at the moves that are like this one down here. It looks fantastic, doesn't it? But that was actually a very low probability move in a number of ways. This turn down was heavily against the trend, but also a move of that magnitude just doesn't happen very often at all. So to hold out for a big move like that and to be in an FX trade for a month doesn't really make any sense to me, because you're just holding out for a move that is so unlikely to take place that you're probably not going to end up with a winning strategy. For me, what I'm interested in, Salik, sort of doesn't necessarily answer your question, but I'm interested in what this market is most likely to do, and I'm looking to trade that. And that's what the sniper discs and that's what that TradeMate tool is there to help you with. So let's have a look at these ones setting up. These are the ones with the number 1 that's setting up for today. Let's have a look at Aussie dollar against the Swiss franc, and let's do some analysis there. So you can see a buy setting up there for today, the 5th of April. What do we think about that as an opportunity? Well, there's a couple of things that we can look at here. Number 1, I like this because, we're buying some strength. What do we have here? We're seeing a positive intermediate trend, positive weekly trend, a positive monthly trend. We've got an ascending chart pattern. We've got the momentum of this market up. All roads are leading really to positive prices at this point, and the software is picking that up with that sniper disc for us. So that's what our members will be looking at. It's a nice strong candle at this stage. Now, this is not a buy for right now. This will be an opportunity for tonight. So that's when our members will be looking at it, because whilst this candlestick is being plotted, so are the indicators associated with that. So we'll be looking at it tonight with a view to placing that trade. But if it looks like this tonight, if we're closing up around that 70-60 area, then that's going to look pretty attractive as an opportunity. Okay, so what else might you want to have a look at? There's a lot on here that I like. The other thing that you can do is you can just tighten the chart up. Sometimes a good idea to have a look at what happened the last time the market was up at these sorts of levels. You can see resistance up to that sort of 71.10 level. That's going to be plenty for us to hit our objective if we do get a buy off those levels there. But we'll have a look at some of those things a little bit later on as we go through some of the charts. Ultimately, I'm seeing a very strong uptrending market, a market that's continually putting in higher highs. And like I said earlier, I would much rather be buying a market that is showing strength than buying a market that is showing weakness. There's no such thing as a bargain. There's no such thing as, buy low, sell high. It doesn't work in trading. What we're interested in here is going with the momentum of this market. All right. So Aussie Swiss, I quite like it from a trade mate perspective. This is what our members will be looking at as well. Click on there. So we can go with what we call the aggressive stop, nice and tight off that level there, that 69.49 area. And we can go with the starter limit, calculate trade details, and you can see there the take profit level coming in at 71.04. So it's about 50 pips there on that opportunity. That's what we're looking at for the objective there. All right. So this tool will help you with a stop loss, so i.e., where to cut the trade if it's not doing what we want it to do. It can help us with the target, our objective for the trade, and you can put those onto your online trading platforms. And then it can help you with the trade size as well. So you can put your account size in, you put the risk in that you want to risk, i.e. 1%, 2%, whatever it may be, and then it can give you a trade size for that. And you can literally copy and paste that to your platform should you wish. Now, of course, I can teach you a bit more as we go through this, through our coaching programs. But, nice opportunity. I'm pretty happy with it, and we'll see where it's looking tonight in terms of that opportunity. But if it looks like this, then we're going to be pretty happy with that. Aussie Yen is another one here that's setting up in the scan. Similarly, you can see again the price is up towards there. So one of the things that I quite like about this as well is it's bouncing off this channel. So this boundary of price. When price is outside here, it's sort of showing abnormal prices, if you like. So if it's within this channel, about 95% of price actions within here. So when it moves out of this, it's almost like something external is going on. So what you often see is the price bouncing off that level and then rotating back higher again. I'm getting a little bit technical here. We don't need to know that, of course, because it's all built into the sniper disk for the point of use. But really nice trading opportunity, just like Aussie Swiss. Will it be a winner? We'll soon find out. But from my perspective, this is showing a lot of signs, a lot of the hallmarks of an attractive opportunity. It's a buying opportunity. We're buying it on a nice high close at this point. We'll see what it looks like tonight. So a little bit of rejection there last week, but we're staying up here at this point, which means there doesn't appear to be too many sellers up here, which is really attractive to us as buyers. It's in line with the longer term trends, and it's an ascending chart pattern as well. And again, you can just tighten that up a little bit if you want to see what the price was doing last time we were up here. It's been a little while, right? So we haven't been up at these highs for quite some time. You can look at the weeklies and monthlies if you want to have a look at a bit more detail. I'm definitely getting a little more technical than I would like at this point. For me, the only thing I'd be slightly worried about is 71.17, but that's going to be inside our objective anyway. So that pivot point, that area of resistance from the monthly chart, 71.17, keep an eye out for that. The market could find a level, a bit of a ceiling off there, but that's going to be inside the target. In fact, the target for this opportunity, if we get it away tonight, will be 71.06. That's slightly inside that objective, so keep an eye out for that, everybody. Okay, I like it though. I think it's this type of opportunity that tends to perform really nicely. Good strong trends, good flowing moves, and so on. Let's just move back to just my daily chart. Pound dollar. Let's go through this one as well. One of the more popular markets. It's been some decent moves on pound dollar of late. Bit of a choppy sell signal there from a few days ago. Looks like we're going to be knocked out of that sell from the 28th of March there. That's okay. It's not really that big a deal. But what we do have is an interesting buy setting up on pound dollar. Now, what's different about this one? Can anyone see anything that's different about this? You can let me know if you see it on the questions box. The main difference you're going to see here is to do with the longer term trends. Now, the other markets we were looking at were like this. We were looking to get on that next wave higher. Pound dollar is different. You've got weekly trends that are down, and we're looking to have a buy against that direction. So we're looking at buying a market that is doing this. Okay, so why would we want to buy a market that's doing this? Because it's starting to take shape as a potential change in direction. These pink snipers are all about identifying a market that's had that strong trending move, but then suddenly the patterns are showing the market moving back the other way. And what we're actually seeing here is, see the CP there? That means a positive chart pattern's taking place, okay? What that means is that we've seen a base, okay? We then start to see the market go up, come back down again, which is here, and then it started to go back up. This is where we are now here. So we're seeing that there. That's that bit over there, okay? So we're seeing this market put in a higher low. So that was the low, that's a higher low. And we're starting to see the market base, okay? Now, in order for the market to move now into an uptrend, it's got to start at some point to put in higher highs and higher lows. The market has got to start to ratchet its way back up. This is here. Okay, so we're starting to see this market take shape. The higher lows are starting to take place. So this actually makes this a very attractive buying opportunity because it could be quite a big, important moment for a new uptrend on pound against the US dollar. Time will tell, but the reason the sniper disc is there is because this is a setup, a pattern that is synonymous with profitable trading opportunities. Yes, there'll be loss-making trades along the way, but actually the market has to change direction at some point. It's had a big base. Now we're starting a decent high there, smaller pullback, hasn't taken out the low. We're seeing a higher low. We're starting to hopefully see the patterns of a new uptrend for the pound against the US dollar. Now, what does that mean in terms of trading? Well, we can use TradeMate and we can apply that very quickly to the opportunity. So what I can do is I can quickly put on TradeMate there, select the bar with the candlesticks on it. Now I'm going to go with, in terms of my stop loss, I'm going to give it a bit of room. So I'm going to put my stop in against the passive stop here. Okay, so off that recent low, and I go with my starter limit. So those are your simple limits there. You can take a screenshot of those or whatever. For me, if you want a little bit of extra color, and that's the purpose of doing these live, I would like a stronger bar here. At the moment, this bar on pound dollar is not as attractive to me because, it's just limping over the line. This is not a big, strong, positive bar. I like to buy a market that's really showing good signs of strength, like a candlestick like that. That's nice and strong. It shows good oomph. It shows that the market is ultimately the buyers are in control. At the moment, it seems like we're still in a bit of a tug of war between buyers and sellers. I would prefer us to see a higher candlestick. I'd prefer to see a good close up around this sort of level, taking out those recent highs. So we can look to close around here, up these highs here. That would show a nice convincing close, good convincing positive price that should then push prices higher to our ultimate objectives. Okay, so it's okay as a trade, and I'm sort of happy enough to take it based on the raw data for these setups. I would just prefer a bit more strength in this opportunity to show that it's more likely to have some follow through. Guys, can I get a quick yes or no? Is this making sense so far? And I'm talking quite quickly and we're getting into the weeds a little bit here. But let me know, yes or no, is this making sense? Yeah, we good? We're happy? Good. Lots of yeses coming through. That's fantastic. Super clear, says Patrick. That's even better. Okay. So that's fine, that's good. I like it. Let's move on. New Zealand Swiss is probably, in my opinion, the weakest of the opportunities that I can see here. And let me explain why. So New Zealand Swiss setting up as a buy tonight. Statistically, it's a nice enough looking opportunity. But you know what? There'd be no point of doing a session like this if we couldn't add a bit of extra color, a bit of extra flavor to what's actually happening here. Because all we can do is just simply follow the snipers, and that's fine. Anyone can do that. But you know what? It's this number here, this 64.94 level. We found a bit of rejection from it. We're very close to that level right now. So there's not much gap between here and here. And this is part of the problem for me, is that we are starting to bang into resistance. And if I just tighten up this chart a little bit, I can see that, what happened the last time here. The last time, what held prices back here was the price moving into that level there. You see the number, there's the dotted lines there. That's that hit the 9 there. We found big resistance off that number a couple of weeks ago, 8 days ago, whatever it is. We're returning right to that level. So what we're in danger of is jumping right about 6 inches from the ceiling, and we're going to hurt our head. That's the sort of the analogy. It's like that whack-a-mole game. At the moment, the whack-a-mole game, it's taken us up, and the price has been banged straight back down again. And this is the thing. We want to see a convincing price above resistance, not just underneath resistance. The danger here is that the price hits that level and then comes wanging back down again. For me, that would be a higher risk trade. If you look at the comparison between Aussie Swiss and Aussie Yen, we're already up here. We're already breaking beyond resistance. So what we then have is free air up to here. We don't have that on New Zealand Swiss. We've got a downtrend on the monthly chart. We're seeing a market that is right on previous levels of resistance, previous ceilings, that could really look to hold prices and prevent it from continuing to go higher. So for me, I think it's a riskier play than compared to the other ones. It's okay, and statistically it may well go on to be a really nice trade. But I think when you've got 4 or 5 trades setting up, if I'm looking and thinking, well, look, I'd kind of like to maybe only trade 2 or 3, this is probably the one I'd least like to trade. Okay, it's less clear than those others. Okay, so that's fine. And then finally, we can have a look at New Zealand dollar against the Japanese yen. This is almost like stark contrast because, again, we're seeing price up here, had a very minor pullback again, bouncing off that top of that price channel like an Aussie yen. Very strong trends on the yen right now, very strong trends on a number of these currency pairs, but a good strong bar. This just fills me with confidence that the price is likely to carry on and go higher. Now, if the price comes flying back into the close tonight, I'm going to be less keen, but right now, this shows good positive signs of strength. And actually, what I can then do is tighten up the chart. What happened the last time prices got up to that 86 level? Don't know, it's quite a long while ago, so I'm not so bothered about it. It's a little while since we got up to those sorts of levels. Sure, up to that sort of 71, 17. That's Aussie Swiss. What am I doing? I thought the number sounded familiar. Just give me a second. Let me just bring up New Zealand yen. Gremlin in my system there, bear with me. There's free air. There's free air up to this sort of 88 level. So there's nothing really that can hold prices back. Don't get me wrong, it's not going to do this in one go. But the point is, we're not sitting there just like we were on New Zealand Swiss, right on an area of resistance. So if you're going to say to me, well, which out of those 5 trades do you like the most? Well, Aussie Swiss, Aussie Yen, New Zealand Yen, they're my favorite of those 3 trades. Probably then Sterling Dollar, probably then New Zealand Swiss. And do you know what will happen now? That there'll all be losses apart from Sterling Dollar and New Zealand Swiss, but we'll see. From a statistical relevant level, from an analysis perspective, that's what's setting up right now. Okay, Salik, how will you know if you've got a trading alert? You need to use the system. You have the system on your device at home. You can run a scan that can actually give you the opportunities, and you just look in the evening. Everything happens in the evening, Salik. So you just run the scan and away you go. Okay. Whew, good. Okay, so that's FX. Hopefully we're all okay with that. Let's have a look now at some stocks. So just give me a moment while I just bring in my stocks feed and we'll have a look at those. Okay, so the momentum stocks. We'll have a look at FCX in just a second. The trades we had last week, Johnson & Johnson, we've got to go a little bit further afield this week for opportunities. I tend to like to look at the Dow stocks or at least the S&P 100. But this one, what we were looking at it there from last week, and this is fascinating because it's kind of done exactly what I expected it to do. So when we looked at this buy last Tuesday, okay, so we called it as a buy, I was thinking, well, look, the market there had a big sell-off off that sort of 178.50, 179 level. So that's where we hit it back in August last year. What I was expecting the market to do is find resistance off that level. Hence my objective being quite tight, 178.50. What's the market done? It's done exactly that. It's just stopped it in its tracks and then started coming straight back down again. So if you were looking and holding out for the say a 5% target, which is perfectly reasonable, you wouldn't have made it. But just with a little bit of simple, just compressing the chart, looking at what price has done before, these patterns repeat themselves, everybody. The market got up to that sort of 179 level, hit it, stopped it, reversed, and here we are now back there. So we'd have ended up with a small loss, but actually just by being just an extra 30 seconds of analysis, that's really all that it is. We took our target, we made our 1 or 2%, whatever it was, and then we moved away. Okay, so it was a decent enough trading opportunity. Very happy with that one, actually. Sometimes you think, well, there's only 1%, but you know what? With leverage, if you're trading that 5 to 1, that ends up being a lot more interesting actually as an opportunity. So that's the benefit of leverage, and actually out of that within 2 days. So it's a decent trade as it turns out, particularly at a time where the stock market, in the last couple of days, perhaps not as feisty as perhaps a few weeks ago. So that's Johnson & Johnson. We also had that Mondelez MDLZ give us a buying opportunity. We were looking up to 62.30. Markets hit that. My ultimate target still in play, 64.50. We're still looking at that one. I know some of our members are still in this one. Currently at 63s, dough 4 at the moment. That's from an entry at 61.05. So, I know some of our members will be up sort of 2.5%. We took about 1.2%, which is actually, again, it's quite small. We're typically looking for sort of 5% moves on these trades, but decent enough. Let's have a look at the new one setting up. Let me just bring up my scan. Now, one of the things I know is that there aren't any in the S&P 100, so I'm just going to go a bit further afield and look in the full S&P 500 here and look to see what's going on. I'll hit search. And these are the opportunities. Now, because this is about 1 o'clock today, this is before the market opens, so we're looking at last night's opportunities, the ones that set up last night with a view to placing them tonight. So we've got KMX. Just really this is choppy, it's horrible, indecisive. You know what? There are enough trades out there to trade something that's smooth. This to me is ugly, it's erratic, it's got no real clear sense of direction. If anything, the bias is to the downside at this point, and that's hardly a good, strong, positive entry candlestick for me to get excited about, particularly given a backdrop of lower lows, lower highs. This market is just trending lower. You can see the weeklies and monthlies. It's actually a pretty awful looking chart. I'm not interested in risking my capital on this one. FCX, on the other hand, is more interesting. Not the greatest entry bar in the world, but when you look at what this market has done, what you're looking at here is a strong uptrending market. So you're seeing that really over the last however long, you've gone from a stock that was back in 2020 down at what, $7, it's now at $50, ridiculous. But you are seeing a market that is showing a history of higher highs and repeatedly breaking up new ground. Now, why should that suddenly stop here? It certainly hasn't stopped it from putting on some fantastic buy trades over the last year or so, or 2 years, in fact, I'm showing on the chart. So what have I got here? I've got another opportunity that, is there anything in here that says it's going to be any different to any of these? No, not really. You've got two really nice, decent opportunities, both of which moving sort of 8 to 9% over the next 1 week from the buy. We've got another trade here. The only issue is perhaps the entry bar is not as punchy as this one. Or is this one? So that kind of makes me a little bit more reticent. However, there is a lot to be positive about. And you know what? I look at this market, it's showing a high, higher high. It's a higher high. You got a low here. You got a low here. That's a higher low. That's a higher low. You got a higher low. This is a market that is doing this. It's ratcheting its way higher, and we're here on the brink of hopefully the next move to new highs. So it's again, you compare that with a buy on that KMX. I don't even bother looking at the name of it, to be honest with you, because I'm just not interested in it. That's a market that's trending low. If anything, I'd prefer to look for a short trade on it. I'm not really interested in looking for a buy. I would rather wait for the next short than look to take that buy. This one here, it's looking okay. What I I like the trends about it. I like the way it's moving. My only concern is the rejection of this 52 level. If anything, especially given that, we can have a look at this with a view to placing it today. If anything, I would prefer to trade it on a break of $52. Okay. If the market can trade above 52, that's going to be a new high, and it's likely to then push on further. So if anything, all we've seen is rejection of 52 over the last 7 days. So I would be more interested in if we can trade above. So entering it on a break of 52 should see a really nice extension to higher prices. Stop loss below that sort of 49.50 area there. But I like it as an opportunity, as I said, particularly if we're breaking above $52. Again, everybody, let me know. Is this making sense? You still with me? Please let me know in that questions box. Just so I'm not talking to myself, if nothing else. Okay, that's cryptos. Let's have a look at those now. Finally. Really interesting trade setting up. Now, I'm mostly interested in this on a long only basis, so I'm just going to remove the short opportunities. So from a buy trade perspective, we've got a few of them there. Let's have a look at Dash first of all. This is that opportunity from last week. So we saw that buy there. That went on really nicely and hit a 5% objective. Doesn't look like much, but you know what? It actually did the sort of thing that I've been worried about. So, the market hitting those resistance levels and stopping. Look at that level there, really struggling to break through. But the good news was that my target was inside that level. So we hit a 5% profit on Dash, which was really great. Trevor, that's something we'd have to go through in the workshops, really. I probably don't have time to go through that now, if you don't mind. So that's Dash. That was great. In terms of the other opportunity that we triggered last week, so the 29th of March, that was last Tuesday, we can also have a look at Maker, MKR. I tend to look at, there's a list of about 25 cryptos here that I tend to focus on. This one, a bit more free room, breaking on higher, hitting that 5% target really, really quickly. And in fact, the ultimate objective that I had for this one, if you looked last Tuesday, if you want to go through the recording, you can do. My objective was 23.16. That's where I was looking at, where the market found resistance here. And it did it again here. So this is, again, these patterns repeating themselves. The market struggling to break through that level. 23.16 was my objective. It's actually gone through the level, but it's found a bit of resistance there for a few days. But a really nice buy going on and hitting that objective very, very comfortably indeed. So that was good. Let's have a quick look at the ones that are setting up. There's quite a few actually setting up for today. From a buy-only perspective, i.e. not looking at shorts, we've got these. Cardano, Bitcoin, Doge, and Monero. Let's have a look at those now. Starting off with ADA Cardano, we've got a buying opportunity there. I'm quite happy enough. It's kind of on resistance though. So for me, I would prefer it above that sort of 125 level, a little bit like that stock we looked at earlier, because what you've got is a market that you're buying it right on resistance, 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 resistance. You've had a bit of resistance into the close of that bar. You had resistance on here back from February, so the market is banging into that level. It's okay, and I'm sort of okay with it as a trade, but I would prefer if we could buy it above 125, just like that stock we looked at earlier. What was that? FCX. So, nice. It's okay. Typically, when you're looking at these cryptos, you're looking around sort of a 5% target. So I think realistically, if we can go above 125, I think really you're looking at 150 as an objective, because what you've got is a break from this high, double high here, break from there as well. This is a big area of resistance at 125. If it takes that out, you're suddenly looking at that 150 level, which is where we found resistance from here and here, and a little bit of support from as well. So that, again, just understanding if we can break above these levels, I'd expect us to move up towards 150 over the next couple of weeks or so. Okay, so simple enough, really, Cardano. So definitely keep an eye out for that one. Stop loss wise on that buy trade, take it out below the low of this bar here. So if you're looking for a stop, decent stop, technically relevant stop, 114.20 just below there would be nice enough. Okay, Bitcoin, similar really. It's okay. There's a nice again, you've got the market starting to rotate high. You're seeing ascending chart patterns. So the market, having had a pretty torrid time over the year, is starting to show some decent signs of life. In terms of where it could get to, the next level of resistance is around that 5,400 level there. Now, TradeMate, we can use it for this product as well. So we can see in terms of Bitcoin, where we'd expect it to go. Calculate trade details, that's showing a take profit of that $50,000 level for Bitcoin. So just inside that area of resistance anyway. So I'm happy enough with it as a buy trade. Again, I'd probably prefer to see a slightly punchier candlestick tonight come the close. I probably prefer that we can have a slightly stronger entry because at the moment we're just limping into this area of resistance. But if we could sort of push up here, something like that, for me, we're then looking at the next move or two around that $50,000 level. So looking good. Stop loss wise, below that low, that 118. So just a smidge below there would be nice enough for Bitcoin. Doge, this is one that actually set up as a buy yesterday, and this is the sort of thing again that I'm talking about. You notice here that resistance, 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 resistance on these candlesticks, but suddenly we saw the highest close, and now because we've seen that highest close, a higher high there as well, the market's continuing to push higher. Really nice move on Doge, actually going on handsomely already. always find it weird talking about Dogecoin since this market was set up as a bit of a joke, really, and here we are trading it. But it's volatile, it moves. That when movement means opportunity, that's all I'm really interested in. We're currently up at 2% on that trade at the moment. It's okay, and we're looking up to around that sort of 1650 level if we can continue to push further higher there on DOGE. That's Doge there. And then the final one is Monero XMR. This is a buy trade setting up for tonight. 245, the ultimate sort of target on there. I quite like this one for the same reasons I've been through earlier, right? That, we've got a market here that's pushing above these highs. If we can close up at these sorts of levels, it would show good convincing long bias. It would show that the buyers are in control. You don't want to be buying a market when it really, the candlestick shows that the sellers are in control. You look at this, right? You look at this candlestick here as an example. So that bar, the day started here, it went all the way up here, and then as the day carried on, the sellers were then finished off the battle. So there. That's why the market carried on, because effectively, by the end of the day, the momentum of the day was heavily down. So it's been selling off all day, apart from that initial knee-jerk reaction. So if you're not in it right at the start, you kind of miss that move, really, because the sellers have taken an ownership of that whole move. That's why prices then carried on lower. Here, we're seeing prices pushing higher. That's good. That's the ultimate direction. That's who's in control of the buyers. That's where I want to see buyers continue to push to. As far as that objective, I say 24.50, looking up to those highs from just beyond that high, looking up to the highs from beginning of the year, back in beginning of January, 2nd of January there. So 24, 245 there. Again, as far as the stop loss is concerned, I'm interested in it below stop loss down at 208. If you're looking for that sort of, $20 target, then really we could look for that sort of $17, $18 stop just below those lows there. So the low down to 208.60 from there. All right, so that's pretty much it. There's some decent opportunities around. What I want you all to do is start thinking about, yes, you've got the snipers there, but how can you take them a step beyond, and how can you refine the process to, I always like to look at golf analogies. Sometimes some holes you look at, there's water on the right, there's out of bounds on the left. You just need to play a little bit safer. And that's what we're looking at here. Our water, our out of bounds, our lakes, whatever, those are the resistance levels that we see when we're looking for buying opportunities. Those are the trends. Those are the support levels we see when we're looking for short opportunities. Okay, so we just got to be mindful of where those are, and then we trade accordingly. That's really all that it is. So we have our repeatable entry point on the chart. That's what the sniper gives us. That's what the red and green lines give us. The question is, what do we then do with it, and how can we push probability even more onto our favor? That's where that analysis comes in. And the good thing is, because you've got that repeatable entry point, i.e., I know which trades to look at, the analysis is actually really easy, because you take those sniper discs off, then actually you've got to analyze every single market individually. That takes a huge amount of time to determine that A, you're more confused than when you started, B, the trade was a week ago, or C, the trade hasn't started yet. We know when the trade's happening because we get the discs on the chart. All you then need to do is look at context to determine whether you want to take that trade. And that's it. Okay, guys, that's it really for me. I'm going to, I think, probably call it an end to the session. Hopefully there's some good stuff in there for you. Guys, look, if you're interested in what we do here, then get in touch. You can like, subscribe, follow us wherever you want to follow us. We're on LinkedIn, Twitter, YouTube, Facebook, and all those weird and wonderful places. You can get in touch with us the traditional way, though, however, which is phone and email. Instructions on the screen there. And like I say, get in touch. If you want a demo of the system one-to-one, if you want us to show you how it all works, then we can do that for you. And we'd love to help you to trade in the same way that we do, and so that you can have these tools on your device at home trading yourself. So like, subscribe, whatever, and we'll catch you soon. Go happy trading. Bye-bye for now.